Hey guys, it's the Simple Investor here. Today we're going to be taking a look at Airbnb, who reported earnings today that disappointed the market. But before we get started, be sure to like and subscribe if you enjoy this content. But to their earnings here, so Airbnb reported revenue here of 2.7 billion last quarter. In 2023, a year-over-year change. They reported 2.84. So again, that's a healthy change. And if we look at their earning before interest, taxation, depreciation, and amortization, you can see here 894 million, and then quarter two in 2023 they're 819, so that's growing quite nicely. And then what that translates to and their net cash here, we look up quarter two here at 909 million, and then that's up to over a billion now. So again, like they're growing here. And then if we look at what their free cash flow has done, they're up to a billion there. And then if we look what they did last year, they were at 900 million. So again, they're growing here. So that is all nice to see. But again, they warned of weak guidance heading into quarter three, and they dropped on that weak guidance. But what Wall Street was expecting today was earnings per share of 92 cents. Versus what they reported was 86 cents. And then revenue, they actually meet expectations. So I actually think it was actually not terrible earnings. I think what Wall Street was freaking out about was just the weak guidance. That's a reflection of maybe the consumer feeling a bit of a pinch as we stay in this high inflation environment and high interest rate environment. People aren't spending, things are more expensive, and potentially we're entering into a phase of stagflation, where inflation is going to stay high and unemployment is also going to stay high, and the interest rate mechanism is in a precarious situation where the Fed can't raise without affecting one or the other. So potentially we're in for some rocky times. But back to their statement here. So this actualized here. So this is obviously North America is their biggest revenue driver. So obviously, if they're saying that U.S. rentals are going to slow, that's going to take a big dent out of their revenue next quarter. But you can see here, it's actually quite. It's not a terrible quarter at all for them. Like I said, they had really nice revenue, nice profit growth. And they're seeing some nice free cash flow growth as well. So it's not as terrible as it looks. I really think that they're just being falling victim to the environment, the macroeconomic situation and climate right now, in that we have high inflation and we have a high interest rate, and we're seeing rising unemployment as well. So that's really affecting Airbnb. But if you look right now at kind of what their valuation is as a company, they're not bad at all. Everything's growing here. Like you're seeing revenue growth here, free cash flow growth here. They actually have a really solid balance sheet, which we'll take a look at. They're not actually too terribly valued either. They're actually fair valued right now as well. And you're just seeing kind of that actualized here. There's the revenue, free cash flow growth. And like again, and then the valuation, I think they're actually lower than this now after hours. So again, like they're not a company that's decreasing or going away anytime soon. And they actually have a really healthy balance sheet. But again, like you're just seeing that free cash flow just continue to grow here at a really, really nice rate here. It's gone up year over year. And then if you look at what their PE is today, the PE is at 17.47, which is a historic low since I think that they actually had their IPO. Yeah, so again, like their PE is really low. Like again, like this company is really healthy. And if you look at what their debt to equity ratio is, they're sitting at a 0.25. You can see that they've got almost $8 billion in equity to long-term debt of $2 billion. So extremely healthy balance sheet there. That ratio is really nice to see. So like Airbnb isn't going away anytime soon. Again, it's just highly reflective of what's going on in the world and in the macro economic environment right now. I don't think that this company is on the verge of collapsing. It's certainly not a time to look at selling shares if you have shares. If anything, it's a time to look at potentially investing at an undervalued company, just because as we enter into a cutting cycle here, which is likely what's going to happen with the Fed making the first cut in September, consumers are going to start to spend more because access to debt becomes cheaper. Maybe that vacation that was too expensive now becomes affordable, and so people will take that vacation, and maybe that booking is vacation is booked through Airbnb. So those are things you got to think about kind of outside of the company itself, is that they're just victims of the macroeconomic situation right now. Because again, like just a really solid all around earnings that's really masked by poor guidance into heading into quarter three, and then also worries that the consumer is not going to be spending as much. But again, I always like to look to see what the company has done in comparison to the S&P the last 5 years. Again, past performance, it does not indicate guaranteed future performance, but this is just a good measure to see the last 5 years. So you can see here, the S&P has dominated Airbnb here. Their S&P is up almost 80% versus the negative 6% growth over 5 years. Again, and Airbnb was really doing well here when the interest rates were very low just after the pandemic. And then again, as we started to raise interest rates to combat inflation, you can see here where Airbnb was negatively affected. But for me, Airbnb isn't a position that I'm looking to gain exposure to. I'm a holder of QQM, which is the NASDAQ 100. So I do have exposure to Airbnb through that, and I'm comfortable with my exposure there. I wouldn't look at opening an individual position into them, but I do think that fundamentally they present a really good opportunity. Their growth isn't going away anytime soon. They're actually going to see more growth going forward as we enter into an interest rate cutting cycle here. But I'd love to know what you guys think. Do you think Airbnb is a buy, a sell, or a hold? Let me know in that comment section below. Be sure to like and subscribe if you enjoyed this content. We'll see you guys next time.